Rates go lower everywhere but the US. But how much higher can the dollar rise? The European Central Bank cut rates this week, as did the Bank of Canada, and the Bank of England is expected to follow. But markets expect the Fed to hold steady until at least June. That's all pushing up the dollar, making US exports less competitive, the opposite of what President Trump wants to see. Jane Foley is head of FX strategy at Rabobank. Jane, the dollar has kept rising as traders bet against all other major currencies in comparison, but just how much more upside can there be?
Well, we did have a little bit of reprieve last week as the Trump presidency started off with no announcement of tariffs, but it does seem quite likely that some of those announcements are on the way, maybe as soon as tomorrow, certainly for Canada and Mexico. So there is a lot of inflationary pressure already priced into the dollar. Now we need to see exactly how much inflation is going to come from those tariffs. So the dollar is likely to hold pretty firm in our view. But there will, of course, be a lot of volatility as the market reacts to the various messages that Trump makes on tariffs.
As you said, President Trump is threatening that 25% tariff on Canada and Mexico could kick in as soon as Saturday. What immediate impact might you expect to see?
Well, we don't think it will be 25% on everything from Canada. Now, Trump has said that they don't need in the US any of those goods from Canada. Now, we would probably disagree. So, for instance, the oil refineries in the US are set up for the type of oil that Canada exports, not necessarily for the type of oil that the US produces. So we would say that if he puts tariffs on Canadian oil, well, the US consumer, many of his voters will be paying more for their gasoline. But there's also a lot of critical minerals, etc., that are used in high tech and also in defense that we would say also that Trump and the US economy need. So we don't think there will be blanket 25% tariffs. The market is probably aware of that now, but it will still be a case of finding out exactly what he wants to do, when he wants to do it, associating that with the inflationary pressures in the US and then the Fed, and then working out what that means for the dollar. So a jittery time for foreign exchange, certainly, but one in which the dollar is likely to remain firm because those tariffs are coming, it seems, in one form or another.
Given that inflationary pressure in the US, then, do you expect the interest rate differential between the Federal Reserve and all other major central banks to persist?
Well, of course, we have to take the Japanese yen and the Bank of Japan out of that equation because they will, of course, be likely hiking interest rates during the course of this year. But in terms of all of the other G10 central banks, yes, it does seem quite likely. So, for instance, there is, we think, scope for maybe one more Federal Reserve interest rate cut on the cards for this year, but maybe not. That would appear really touch and go at this point because of the inflationary pressures caused by Trump's policies. Now, looking for the ECB, yes, we had that interest rate cut yesterday. And this morning, we've had some news on inflation, which perhaps suggests that it is slowing further in the Eurozone, opening up the scope for more interest rate cuts from the ECB this year. But of course, much of that is already in the price. So what we need, I think, to really push the euro significantly lower and possibly open up the gates to a move below parity this year is more evidence of benign inflation in the Eurozone, which would open the door up to more than expected interest rate cuts from the ECB.
On the other hand, Jane, what might economically and geopolitically lead to a weakening of the dollar?
Well, I mean, there could be a weakening of the dollar relative to, say, the euro if we just don't get very significant tariffs, or we don't get significant tariffs, say, on the euro region, or if inflation in the Eurozone proved to be much stronger than people are anticipating, meaning they had to revise their expectations with respect to the ECB. And more generally, I think with respect to the dollar in general, bear in mind that the market has priced in a lot of news on tariffs, a lot of news on inflation coming from not just tariffs, but also Trump's fiscal policy intentions. If that didn't happen, if the US economy slowed more or inflation was more benign, well, the market would have to reset its expectations, and that could mean the dollar could weaken.
That was Jane Foley of Rabobank. Don't forget, you can watch more videos on Reuters.com.